Bloomberg Audio Studios. Podcasts, radio, news.
Our last podcast recording of the year.
Yeah.
It's been an interesting year.
Has it? One thing I never do.
Yeah. I know you don't.
12 years in media is any sort of year-end wrap-up or look forward, which is so good. Among the best parts of my life as a media person is just not ever doing that. But people want that. People are like, oh, would you like to contribute to 20 themes for the year ahead? And I say, no.
No.
No, get away.
I'm sorry for introducing a hint of reflection.
No, it's okay. It's okay. We can reflect about my lack of reflection.
Yeah, that's good.
How about your themes for next year? What are you looking forward to?
Looking forward to the introduction of multi-share classes.
Oh, boy, see?
Yeah, that'll be pretty
Aren't I
fun.
glad not to be looking forward to that?
Hey, could be big. What are you looking forward to next year? Oh, I wasn't supposed to ask you that, but
I'm looking forward to coming in each day
yeah.
to find weird news and write about it delightedly. And if I knew what it would be that weird. It wouldn't
That's
be that
true.
exciting. It wouldn't be delightful. It wouldn't be...
There wouldn't be as much mirth.
It wouldn't
you
be
know?
the spontaneity and joy that I bring to my job every day.
Fair.
Doesn't it sound like it? Hello and welcome to the Money Stuff Podcast, your weekly podcast where we talk about stuff related to money. I'm Matt Levine, and I write the Money Stuff column for Bloomberg Opinion.
And I'm Katie Greifeld, a reporter for Bloomberg News and an anchor for Bloomberg Television.
What are we talking about today, Katie? It says on my script.
Shoot, what do you want to talk about first? We actually have 4 topics today.
4 topics. You want to hit the Warner situation?
Yeah.
It's pretty
Jeez
weird.
Louise. Yeah. Remember you were reluctant to talk about that?
Well, okay. So here's the thing. It went from being like a big media merger with like a lot of moving pieces and a lot of like stuff that people were cared about in terms of like antitrust and like creative direction of Hollywood and like the Trump involvement and who will own CNN and all these things. And it went from that to being a really drawn out fight about closing certainty and merger agreements, which is much more my areas of interest. And it's kind of wild, like what is happening, which is that there's some debate about who has the higher bid, but Paramount are pretty sure they have the higher bid. They also think they have a better regulatory path. But Netflix has said no to them for a number of reasons, including bid valuation. But what they really leaned on in their most recent, like they made an official filing telling Warner shareholders to reject the Paramount tender offer. And the Warner board really leaned on the fact that Paramount's money, Paramount doesn't have money, right? Paramount is a much smaller company than Warner. And it has debt commitments, which are, fairly standard debt commitments. And it has some equity commitments from like Middle Eastern sovereign wealth people that Warner is kind of casting aspersions on. But really, the equity is backstopped by a $40 billion commitment from Larry Ellison's personal trust. Larry Ellison, the dad of Paramount CEO David Ellison, and, fifth-ish richest person in the world, $250 billion of Oracle stock. But it's all in this trust. And the incredibly weird thing that's happening here is that the commitment papers are all apparently being signed by the trust. And Warner says, well, but you could take all this stuff out of the trust. And then when it comes time to close, we'll go to you and we'll go to the trust and be like, all right, we need the $40 billion. And the trust can be like, I don't have any money. I'm just like an empty shell. And I think that's right. I think that as a technical analysis is right. And the Paramount people are like, this is crazy.
Yeah.
Larry Ellison is good for the money. He has signed other big merger commitments as the trust, right? Like he committed to Elon Musk's Twitter deal and to the Electronic Arts deal. But he was not the principal there. He's not the person on the hook for the whole deal. He's like, he's committing to Elon's deal. And so basically Paramount is like, no, look, this is fine. This is a crazy technicality and you're misleading people by saying that this matters. And Warner's like, no, we really need you to commit your money. And the solution to this seems so easy that I don't understand what is happening. It's so like the easy solution, I think Warner has asked for this, is in the piece of paper where like instead of saying like the Larry Ellison Trust signs this deal, you just say Larry Ellison signs this deal, right? And then like he owes the money. And if he takes it out of his trust or any other, personal vehicle, he has to close the deal. And I don't understand what is happening because the Warners are like, just sign it in your personally guarantee it. And Paramount so far, I don't know if they've said no, but they haven't said yes. And so that's where we are.
Yeah.
It's very weird.
Yeah. A tangential thought I had is that you mentioned Larry Ellison, the fifth wealthiest person in the world. Oracle stock has gotten pretty flattened over the past couple of weeks. It's just gotten rocked. And I wonder how that factors in.
Right. So like, I don't think that it is reasonable for Warner to think this guy with, let's say, $250 billion of Oracle stock, less than it was a few weeks ago, but $250 billion. I don't think it's reasonable for them to think he's not good for a $40 billion check, right? It's a meaningful chunk of his wealth, but it's like 20% LTV. The thing that I'm struggling to understand here is if you're Warner, the situation that they're positing is kind of absurd, right? The situation they're positing is like Paramount or Ellison change their minds and they don't close the deal and Warner sues them and Paramount is like, oh, we don't have money. And then Larry Ellison's like, oh no, it's the trust and the trust doesn't have any money anymore, right? Ha ha ha. It's a crazy thing for them to do. And I think like part of what Paramount is saying here is kind of like, that would be a crazy thing for us to do. And just like as a reputational matter, like you shouldn't worry about it.
Yeah.
But I think they're like ever so slightly maintaining the legal flexibility to do it if they really have to. And you could imagine that being part of a story of Oracle stock flatlining. You could imagine that being like, if things get really bad, will we yoink the shares out of the trust and stiff Warner? Yeah, maybe. Right?
Yeah.
And like that's if your stock is riding high, that's a different story than if like you're getting slammed in the market for having too much AI lease obligations.
Well, to add insult to injury, did you also see that Jared Kushner's Affinity Partners is withdrawing from the battle altogether?
And it's a little interesting, right?
It is a little bit interesting. So
like generally you're like, oh, this is such a great deal. We really want to win it. And then you're like, one random equity partner is like, it's not worth it. I don't want to win. It's a bad sign somehow.
The statement from the firm was that with two strong competitors vying to secure the future of this unique American asset, Affinity has decided to no longer pursue the opportunity. We continue to believe there is strong strategic rationale for Paramount's offer.
Yeah.
So
it's just weird.
It's like a very, very like, good luck,
Yeah. One thing that people really commented on about the Affinity involvement early was, the deal environment is so politicized and like the sort of subtext of Paramount's bid was Netflix will not get antitrust approval, one, because it raises antitrust concerns, and two, because we're friends with Trump and he'll tell them not to approve the deal, right? And like with Jared Kushner on Paramount's side, there's some enhancement to that argument. And if him gone, it's like, oh, maybe that argument's off the table.
So where does this leave Paramount?
I feel like I said this last week. They should probably raise their bid because they have said in public on television that their bid is not best and final. And then they should probably have Larry Ellison sign a personal guarantee for the deal, which seems
just sign the paper,
easy.
Larry.
It seems very easy. And I'm very puzzled that it's not as easy for him as we thought, as I think. Can I talk about one other thing about the Warner deal?
I really want you to.
There's a great Financial Times story about the advisors who, in any big merger, right? It's like the sell side advisors are going to get paid and then like one buy side team of advisors is going to get paid an ocean of money and the other one is not. And so, it's a bitter battle. But they also quote people talking about how like, this is a deal that like kind of got negotiated over Thanksgiving and is now heating up into Christmas. And they quote like one of the advisors saying, when the NBA players play on Christmas Day, nobody says our holidays are ruined. They say, isn't it great you're in the NBA? This is as good as it gets for investment bankers.
It's like a perfect quote.
It's a perfect
It's
quote.
also so true.
I was nothing special, but like I worked in like high stakes M&A and like one way it's high stakes is you're like working all night on holidays, right? And like it's like you feel cool about it. It's as good as it gets for investment bankers. And that happens to me and it happens over Christmas.
Yeah. Do you want to talk about Excel sheets?
Yeah.
So, Tricolor?
Tricolor. I think it's just Tricolor, but I don't know.
Can we just call it Tricolor?
I'm going to call it Tricolor.
We're in America.
Yeah. It was a subprime auto retailer and lender. So you could like buy your car from Tricolor and then they would lend you the money to pay for the car. And they went bankrupt this year because they ran into some trouble with their creditors. The creditors had some complaints. And when they went bankrupt, the story was kind of they were like double pledging loans, which makes sense, right? They make a bunch of car loans. They put them all in an Excel file. They send the Excel file to one of 6 lenders. And, if you send the same Excel file to two different lenders, then you can borrow twice as much money. That's kind of what people were talking about and what they assumed. But this week, the CEO of Tricolor, Daniel Chu, was indicted by federal prosecutors. And the accusation is, yes, a lot of double pledging, but also sillier stuff. The one that I think everyone really enjoyed is that, so they make a lot of like subprime auto loans, and a lot of them are not current, right? Like people don't make payments. And so the way that their deals with their lenders work is that you can't borrow against a loan that's more than 60 days delinquent, right? Like if people haven't paid in 2 months, then you can't use that as your borrowing base to borrow from your lenders. And they had a lot of those loans and they needed money. And so they're like, we're just going to pretend those loans are current. So they marked them all as current and they could then borrow more money against them. But they made a little mistake, which is that if the loan is current, then it's getting paid every month, which means that it goes down. The balance goes down every month, right? Because each month you make a little payment on your car loan and your car loan goes down a bit. And they didn't decrease the amount of these loans because they weren't current. They weren't getting paid and they just marked them current to trick their lenders.
Yeah.
And this worked for a while. And then the reporting from Bloomberg is that it's a junior analyst at Waterfall Capital is one of their lenders.
Very fitting name for this situation.
Yeah. Looked at these Excel sheets and said, why are these balances not going down? And so the lender called Tricolor. I was like, hey, what's up? And so like two things happened there. One is that Tricolor and like Daniel Chu are like allegedly scrambling to tell the lender some story.
Right.
But the other thing that's happening is that like the people who are marking the spreadsheet are like, oh, I need a lawyer.
Oh.
And so there are calls, the indictment says, there are calls among the Tricolor executives that one or more, like some of them were recorded by two different people on the call. Because everyone is like, I need to be able to bring something to prosecutors so that I get the cooperation agreement. So I'm not the one who goes to prison on this deal, which is really like quick thinking. So there are all these recorded calls where they say wild things, including Daniel Chu allegedly had a call with Waterfall where he was like, oh, no, this is some sort of systems problem. I don't know what it is, but we'll fix it. And he said, quote, look, if we were trying to commit fraud, we wouldn't be so stupid as to keep the same balances on there. Nobody would be that stupid, which is just like.
It's perfect.
Yeah.
It's hiding in plain sight.
Right. I said in my column, like, nobody would be so stupid as to do fraud this way. I was like, it sounds appealing, but it's not a good argument because like there are a lot of stupid frauds out there.
I mean, the defense did work for a little bit.
He says on the call that it worked, but like the thing unraveled pretty quickly afterwards. I don't think it worked.
Yeah. I also love this detail. This is from the Bloomberg News story that by late August, Chu was plotting with other Tricolor executives, including co-defendant David Goodgame, another great name, and Jerome Collar on how to settle with JP Morgan, et cetera. During the call, Chu likened Tricolor's meltdown to Enron, the energy giant felled by accounting fraud. He even discussed the idea of pinning the blame on banks for allegedly ignoring red flags, a threat they hope to wield as leverage.
Right. You're like,
it's bold.
Like, hey, guys, what if we were Enron?
Yeah. Well, he did say Enron has a nice ring to it, right? Chu said. Enron raises the blood pressure of lenders when they see that, he added.
Yeah. Yeah. Really a high wire act to be like, we're Enron, but we're not going to prison.
And also, perhaps this is your fault. It's a difficult needle to thread.
But the this is your fault argument is like, we were so blatantly committing fraud that I can't believe you didn't catch us. So when you think about it, it's your fault.
Yeah.
Like, you got to make that argument to then settle with the banks and have them not go to the police. And then, it's tough. It's tough. Doesn't seem to have worked here.
Really charming, though. This was a nice December read.
Yes. Yes. You know what else was?
Tell me.
You know what else has a real, I was going to say end of year vibe, but really more like end of civilization vibe.
Oh, God.
Trump Media, the $3 billion public company that runs a social media site and also like a ETF business?
Question mark?
Of some kind. Mm-hmm. I can't say it with a straight face. They bought a nuclear fusion company.
Yeah, they sure did.
Why not, really? Why not?
Yeah, this was very sign of the times. I'm not going to pretend to really, really know what nuclear fusion is.
Nuclear fission is when you like smash two atoms together and they go flying out and they produce energy from like breaking apart. And nuclear fusion is when you smash two atoms together and they stay together and they produce even more energy from staying together.
Yeah.
Nuclear fusion is what powers such notable sources of power as the sun.
Oh, sure.
And not a ton of commercial nuclear fusion generation currently.
Yeah.
But a lot of people have thought about it because it would be a pretty good source of power. And some of the people who've thought about it work for this company called TAE, which is a nuclear fusion company, founded in 1998. Like, real people, as far as I can tell. From their investor presentation, they seem to have, first of all, raised over $1 billion in funding from people like Google and Chevron. And secondly, pictures of reactors, right? So maybe they're on their way to commercial grade nuclear fusion. But in any case, they merged with Truth Social.
Paint me a picture of a world where this makes sense. What could be the logic here?
I want to just make sure that we keep my laughing into But no, I mean, okay, so there's a press release. You can read the press release.
Yeah.
One thing in the press release is one thing they say about their mission is it's to free the world of big tech censorship, which not applicable to nuclear fusion probably. But another thing is it's America first strategic, it all kind of fits in a vague strategic America nuclear power. Yeah, sure.
Yeah.
But the other reason for the deal, which is also in the press release, is they say in the press release, the deal is to, quote, combine TMTG's access to significant capital and TAE's leading fusion technology. So one way to put that, one way to rephrase that,
help me out.
Trump media has raised a lot of money, has a big stock price, isn't doing a ton with that stock price. Stock price was higher, now it's lower because people had high hopes. They bought the stock and then it's social media, ETFs, whatever, right? And there's not been a ton of exciting news and the stock has drifted off. But they have a lot of access to capital. And if they announce big news, the stock will go up. The stock was up a lot on Thursday. And one thing you might do if you have a lot of access to capital and not much of a profitable or revenue generating business is use your access to capital to buy other businesses. Because then at the end of the day, you have a nuclear fusion company, right?
Yeah.
You've used your access to capital markets to acquire real assets, right? Which, the Truth Social is an asset, but it's not, not $3 billion of assets. And then from TAE's perspective, if you are building nuclear fusion reactors, you have a lot of need for capital. And if someone has a lot of access to capital, then that's a good trade for you, right?
Yeah.
So Trump media brings the stock raising ability and TAE brings the possibility of nuclear fusion. But it's a very strange combination because it's people whose business is somewhere between running a social media company and being friends with Donald Trump.
Yeah.
And now they're in charge of nuclear fusion. It's just a strange pivot.
You point to AMC buying a gold mine. There is
they did do that thing.
Some tenuous precedent for this.
Is there precedent for meme stocks getting into unrelated businesses? Because the point of a meme stock is that your stock is really high without necessarily the underlying business justifying it. So you're well, okay, I'm going to use this high stock price to go buy an underlying business that justifies it, right? There's totally precedent for that. GameStop was playing that game for years, there's definitely a precedent for trying it.
GameStop never went out and bought anything super cool though, right?
No.
I just revealed that I think buying a gold mine is super cool, but that's fine.
It's kind of unarguably cool. It's cool.
Yeah.
Whatever else it is. That was a cool move. I was oh yeah.
Yeah.
AMC buying a gold mine. That's good on you, yeah. Nuclear fusion.
Also,
you got to give it to them.
Gotta give it to them.
I was not expecting that. And I was all right. All right.
Good game.
Good game.
Not, of course, the co-defendant in the Tricolor. Good game.
Should we talk about watching videos?
Yes. Tell me about this. So South Koreans, right?
South Koreans.
They love.
I didn't know this until recently. They love
crazy
trading in American financial products.
Yeah.
Probably also South Korean financial products, but there's
especially ETFs too.
Yeah. And so levered ETFs, great. Back up the
good
truck.
Time.
And so there's a big boom in South Korean retail speculation on stuff like levered ETFs, which we've talked about, are, they're a product that sometimes loses people money, and that how it works is not necessarily intuitive to everyone who looks at it, right?
Yeah.
I mean, in particular, the way levered ETFs work is they provide 2 or 3x the daily returns, and so they don't provide necessarily 2 to 3x the yearly returns.
As discussed.
Yeah, if you buy and hold a levered ETF, it might rip your hand off.
Might hurt.
Might not. Might be great.
There are some examples.
Not investment advice. But anyways, the South Korean regulators are sick of this. And so they've said, like, as of this week, brokerages will, this is from a Financial Times story, as of this week, brokerages will automatically block investors wanting to put their funds into leveraged or inverse ETFs and who cannot provide the certification number given to those who have completed a 1-hour online training.
1 hour?
Yeah.
Okay, so I didn't read the FT story.
Click through an online, like an hour-long online video.
I was thinking like the little video ad you get before a YouTube video where it's 15 seconds and then you can click through.
Yeah, right. U.S. regulation has a little of this, like with like options, you know, like you have to like click some forms to be approved to trade options, right? And like an hour is aggressive.
Yeah.
Someone emailed me to be like, there's going to be an aftermarket in those codes. Like you watch the video, you write down the code, you send it to 10 of your friends for money.
Can make an ETF out of that, yeah. Lever it a few times.
But I will say, I love this.
Yeah, because you think that there should be gated access to these products?
Absolutely.
Wow.
Yeah, I'm a gatekeeper.
Wow.
I think there should be gated access. I also think that, like, if you're a securities regulator, one real bind that you have is that when stuff is going up, if you are ever like, we don't want people to be able to invest in this stuff, like people get really mad at you because you're standing in the way of the fun. And then when this stuff goes down, it's like, oh, this was a terrible product. They come to the regulators and say, where were you on stopping this terrible product? And as if you're the regulators, it's an unpleasant bind to be in. And you can't really do anything other than try to put the decision on the retail investors and try to give them as much information as you can. And also, like, make it not your problem, which means, like, you know, people email me like, there's going to be an aftermarket in those codes, right? Like, yeah, people are going to trade these ETFs without watching the hour-long video.
Yeah.
But, like, that's not a problem, because from the regulator's perspective, those people can't complain, right? If you like didn't watch the video and then you buy the ETF and you go to the regulator and you're like, oh, why did you let me buy this ETF? I didn't even watch the video. The regulator's like, your problem, man. You should have watched the video. Yeah. I don't know. Like, I think it's a good move.
I have some practical questions. Is this before every single purchase that you make, or is it just like...
it's like to get turned on to trade leverage ETFs.
Oh, interesting. So
but I do think that, like, if it works, you could have a separate hour-long training video for all sorts of products. I really want to, like, record the library of, like, don't buy these product videos.
People would actually watch the video then. So good. That would be fun.
We should turn this podcast into that. We almost have.
Yeah, we can monetize that. This reminded me of...
Sell it to the SEC.
An episode in 2022 when FINRA apparently opened a consultation on whether complex exchange-traded products should be basically curbed. So complex in their world means leverage and inverse, crypto, certain crypto funds. And some of the things that they were considering were enhanced disclosure and a knowledge check for retail customers. So basically like a little quiz was the understanding at the time. And I was taking a look at my reporting from the time. Apparently, when I wrote this in mid-May, FINRA had received 12,000 comments on this proposal. And for context, usually FINRA notices get fewer than 20 comments. So it met violent opposition in the U.S.
Right.
But I think it would be fun.
And I assume that's not like mostly from brokers being like, I want to sell stuff to rubes who don't understand it. I think it's mostly from retail customers being like, I don't want to watch a video before I buy stuff.
Yeah, or like, I don't want to take a little quiz.
Yeah. I'm not surprised that it met with violent opposition. I just like it.
I would love to take the quiz, though. I think that sounds fun.
Sure, yeah.
If someone, I don't know, had one, I'd be interested in taking it. Someone could check our knowledge.
Good game.
Good game. Have a great holiday season, everyone.
We'll see you back here.
Well, they'll see us on January 2nd.
Yeah, I was going to say, we're off next week.
Yeah.
But probably back the following week with a mailbag episode.
Unless something happens.
Something goes wrong. Unless it gets deleted.
Whoops.
And that was the Money Stuff Podcast. I'm Matt Levine.
And I'm Katie Greifeld.
You can find my work by subscribing to the Money Stuff newsletter on Bloomberg.com.
And you can find me on Bloomberg TV every day on the close between 3 and 5 p.m. Eastern.
We'd love to hear from you. You can send an email to moneypod@bloomberg.net. Ask us a question, and we might answer it on the air.
You can also subscribe to our show wherever you're listening right now and leave us a review. It helps more people find the show.
The Money Stuff Podcast is produced by Anna Mazarakis and Moses Andam.
Our theme music was composed by Blake Maples.
Amy Keene is our executive producer.
And Sage Bauman is Bloomberg's head of podcasts.
Thanks for listening to the Money Stuff Podcast.